Hey everyone, Steve here from theturtlefollower.com, and in this video we're going to take a look at the markets for the remainder of the week. It is September 30th, 2015, so the quarter just ended. A little bit of maybe window dressing into the end of the quarter, but who knows. So first and foremost, the life is getting crazy on my side of things, so I apologize for not having a lot of videos out the last couple weeks. It goes for free members and premium members. There's just been everything going on at one time, between the kids' sports and extra work from my full-time job. I've been pretty much working and running around the clock. We're looking for houses. We're doing a lot of different things. So again, apologize for not getting more information out to you, but I also don't want to put it out in a way that is just half-assed essentially. So I haven't had the time to do it. I finally do have a little bit of time today to sit down, so I want to go over some stuff, and then hopefully we'll have a weekend update. We're supposed to have a huge storm, maybe a hurricane hitting New Jersey this weekend. Hopefully it's not as bad as Sandy. I don't think it is, but so we'll be inside, so it should be a little easier to get to what I need to get to. So last we talked, we're looking at the ES. We talked about potentially playing this to the short side on this candle right here, which was on the 17th. All right, we said if you wanted, you're looking for a potential play, you could look to short that with a stop over the high, which was right around 2013. That trade looks like it worked out very well. Okay, and if you took it, you probably wanted to take it off sometime today, into these lows, or even if you wanted to take it off into the lows around 1880. But at this point, I would say it's probably not the right position to be short on this. It looks like we're going to probably get a little bit of an oversold bounce, and then see where we head. But for right now, you can see that we do have, at this present moment, a higher low in place. All right, so for right now, I would say we're probably looking more to a neutral market the next couple weeks, or at least I shouldn't say weeks, I should say next couple days going forward. Now what you can do is, if you want to take it to the long side now, you could look at trading to the long side with a stop right here. Again, another swing trade, and it's a lot easier to see on the SPY. If we take a look at that you could see this consolidation that is actually formed in the market, okay, right through here. All right, and now we're bouncing off those lows. All right, so these were the lows that we hit all the way back on the 25th of August. We hit those lows once again, and that provided a little bit of a springboard. So I'm actually long the market right here for a swing trade, stop under 186.75 if you're using the SPYs. All right, but a lot of the other indices looking like they're getting ready to bounce. If we look at the NASDAQ futures, all right, again, higher low in place. We've taken out that high. Let's remove a bunch of these drawings actually. Okay, so now we have a higher low in place, and maybe the potential for a move back to those highs. But for right now, I would say at this point in time, you're really looking at something in this range here. So again, you want to take it long, you put a stop under yesterday's low. If you don't want to trade the futures, you could trade the Qs, triple Qs. All right, and again, you can see on the triple Qs a little bit more of a rectangular shape as opposed to a channel to the upside. Okay, but again, this is a good spot to potentially take this to the long side. If we look at the Dow Futures, the YMs, okay, similar situation here. All right, bouncing off that 15,828 area. We had identified that level in our previous weekend update and stock market outlook. All right, so right there, again, all similar play. So what does that mean going forward? Now, for me, I think it just means that we have to just be cognizant that I don't think that this is the low, okay? That's for sure. But I also don't think that we are necessarily in a bad spot. And what I mean by that is Now that we've kind of put in maybe what looks like a higher low, we're starting to work into this triangle pattern. And you could see in a lot of the other futures contracts, but we're starting to work out this triangle pattern as opposed to the wedge pattern or the bear flag pattern. So what that means is, can we essentially go back and test this level down here? Absolutely. All right, 15,161 on the Dow, 15,500. Absolutely. All right, but I don't think it's necessarily being tested in this type of manner that we saw back in August. I don't think you're going to wake up one day to the Dow down 1,000 points. If we're going to get there, it's going to be a slow, methodical grind to the downside. So this is where you need to kind of make sure that you can understand how to trade both to the long and short side. And that's kind of stuff that we go over with the members. We've kind of put on a couple short trades. One working out very well is Autodesk, ADSK, and it's actually breaking to new lows today. All right, so it continues to just break down here and just trade to the lows. Now, as far as other trades go, I would just say at this point, and one of the reasons that I haven't really been putting out a lot of videos is there's not a lot to do. Okay, the more you do in these periods of consolidation and uncertainty, the more it usually ends up hurting you in the long run. So, you know, again, here's the ES with that same wedge pattern, triangle pattern. So as I said, I think right here, right now, I think you can take some small trades. Time frame wise, they're probably very small. As I said, you want to trade the SPYs to the upside here and probably look to take them off around 197 or so. You want to trade the Qs to the upside. I think you can get that. I think you can get it like a 2 or 3 day move, but understand you're not going to be getting these moves where you're just, you know, a week down the line, you've just grinded 5 or 10 days straight to the upside. It's just not happening. So any breakout is being sold, any breakdown is being bought. Difficult environment all around. So moving forward, I would say at this point, couple things. Keep your trades short, keep them small. You know, just if you want to trade, that's fine. If you don't want to trade, honestly, there's a lot better things you can do than trade right now. You know, this is not an environment that is conducive to trend following. That's one of the main strategies that I use. But honestly, I've had to change my style a little bit here because I like to stay active in the market. I like to feel the market and what's going on. And to do that, I feel like I need to be involved. So if you feel the same way, and that's fine. I mean, everybody's wired differently. Just understand that your strategy may not work the way you think. So as I said, I'm taking swing trades to the upside right now in the SPY. I'm doing things that I wouldn't normally do. All right. So there's one aspect of it. So just understand that the environment has shifted a little bit, and that going forward, I think there's going to be a lot more of choppy action until we either break out of the range or break above, as we've talked about for so many weeks now, this 1992 or 1830. Until we do one of those, break one of those sides, just understand you're in chop, as far as I'm concerned. Second of all, the market is to the effect of it's not really acting, you know, the way let's try and rephrase that. It's not really acting the way we're accustomed to, okay? And, you know, we're accustomed to there always being this underlying bid in the market. So, you know, when you have a pullback, everybody just blindly buys. That doesn't happen anymore, and it's not happening. So, again, if you're finding that you're struggling, I think the best thing to do is just step aside. If you feel you need to be involved, cut your position sizes in half. All right, just that simple. Cut your position sizes in half. I have right now, if we open my sidebar, I actually have 28 trades on right now, okay? And that for me is about normal, all right? That's about normal for the way I trade in this account. My trend following accounts, I have nothing. I have no positions on right now. They are cash. If not, they have maybe a put and a call in, you know, in a couple of different stocks. But other than that, there's nothing. They're I would say 85 to 90% cash in those accounts. My trading account, I am long and short. Short Mosaic, I'm up 16%. Short SWN, I'm up 12%. ADSK, 6%. All right, and then I have some big losers. Com, all right, down 11. Expedia down 7. Under Armour down 6.5. All right, so I've had to change the way I've traded, and that's predominantly because I don't feel comfortable just being long only right now. And so going forward, as I said, it's really just a matter of making sure where we're at this point everybody's comfortable with. So this video is going out to members, to free members, basically to everybody, just so everybody's on the same page. Everybody knows how I'm trading. And as I said, just because I'm trading doesn't mean you need to trade. If you don't want to trade, don't trade. It's very simple. But to think that you're going to be able to put on a trade at this point, and use a trend following technique, I think is a little bit difficult. So at this point, as I said, trend following accounts pretty much cash. Trading account, I just continue to chop around. I make a little here, make a little there. I give up some here. I've been successful doing it. It's not the easiest way to make some profits, but it works. All right, so at this point, I would say we're probably just gonna end the video. I think I've rambled long enough, but we still continue real quick. We'll just identify the key areas. The ES 1992, 1830. Until we get out of that range, just understand that we are in a range. The NQs, all right, we took it off, but I would say you're looking at something in this range here, and that is between 43.80 and 39.75. All right, the YM, the Dow Futures. Okay, we've talked about this before as well. All right, 16.550 and then 16.850. You can see we broke out on that Fed day. We went all the way up to there, and that's where we got rejected, right along this downtrend line. All right, now we're putting in potentially a higher low, looking for a move to the upside. So again, right now, these are the levels that you need to keep an eye on. To the downside, it would be 15,800 and 15,500. And the last one, the Russell. The Russell, we're looking at 1167 and 1075. Look at today, we came right into that low. All right, so the Russell already testing that flash or the crash low from the 24th. All right, and you can see here it bounced. So again, if you're looking to get a little frisky with it, then go ahead, buy the IWM, put a stop right here under. Obviously the IWM will be a little different, but put a stop under yesterday's low and see if you can get it back, maybe halfway. Do I think that this is a bottom that eventually makes its way all the way back to 118.84? No. You're going to look to trade it back to the trend line and then maybe look to reverse, at a point along this downtrend line and look to find a spot where then it starts to trend downwards and switch your position. That's a very possible trade setup. All right, and again, we'll just run through the futures. Through the ETFs. So there's the IWM. The diamonds are the Dow, DIA. All right, again, you want to take it back, take it to the trend line. All right, it's not going back to 169, at least not that I know, not that I think right now, but who knows. All right, so take it to the trend line, the Qs. All right, downtrend line in place. All right, bouncing off the lows. All right, so stop wants to be somewhere around 98.50. Take it back to the trend line, maybe 106 or so. And the SPY, as I said, this one, here's the trend line. We don't even have the trend line drawn, but essentially there's a trend line here, and there's maybe something more along those lines. So either way, I think here you can maybe get it back to 198, 197. And then you really want to look to take some profits. It's not going back through, 2020 or 203. It's not going to do it. At least not on this move. If it comes up there, maybe it has another higher low, and then it breaks through. All right, so just understand what's happening with the volume, or understand what's happening, who's a buyer and a seller, and we'll try and revisit this over the weekend. But for right now, as I said, I think less is more. We're probably sideways to higher right now for the next few days, but that could change at any moment. So just keep yourselves on your toes. And again, if you don't want to trade, don't trade. Other than that, have a great rest of the week, and we'll catch you over the weekend. Take care.